Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm going solo to talk about the meme stocks. I'm not sure we've ever talked about the meme stocks on this podcast. What are they? Should you be buying any of them? And what makes this different from the last time we had the meme stock craziness? And it's been a couple of years, so even I had to do a refresher, like what's going on with these stocks. So the meme stocks, remember them from back in 2021. They were GameStop. They were AMC. Yes, the movie chain. They were Bed Bath & Beyond. There was a couple other names in there too, but those are three of the big names I remember from the last time, especially GameStop. But these were stocks kind of down on their luck where the traders decided to kind of go in and make some money. So these aren't really investing type of situation here, but they are a trading situation. So that's why I still wanted to take a look at it because, the stocks have soared, then they pulled back. This time around, it may be only a week or two phenomenon. I'm not sure it's going to last as long as the last time, but sometimes with these meme stocks, you get like a burst of energy and trading in them. It kind of dies down, but then it comes back and the traders are in and out of some of these names. Now, I do have to caution that usually the meme stocks are not stocks that, have the greatest fundamentals. Let's just put it that way. Bed Bath & Beyond is no longer with us. You can no longer trade that one. So keep that in mind. This is just a trading situation, as I mentioned. So what are the meme stocks for this go around? If they're not GameStop, AMC, and Bed Bath & Beyond, they are still in that kind of retail consumer category with Kohl's being one of them, ticker KSS. We had Krispy Kreme donuts, DNUT is the ticker with that one. We had GoPro kind of jumped in there. Remember GoPro from back in the day? GPRO is the ticker with that one. And then Opendoor, that kind of kicked off the whole meme stock this time around. Opendoor is open, OPEN. I have some familiarity with Opendoor because I did follow it over the last 5 years. Remember, Opendoor is the company, maybe you don't remember, but they buy houses. So if you wanted to sell your house, basically sight unseen to Opendoor, they were willing to buy you out without you having to list through an agent, lose some money that way. And you never had to have people tromp through your house. You never had to, paint the walls, fix it up, make it look good. They just bought the house. They would fix it up, flip it, and make money. But then the Fed raised rates in 2022. They got caught having bought a bunch of houses for the higher price points. Then the market froze up. They tried to flip them for those higher prices. They could not. They ended up taking $1 billion losses on a whole portfolio of houses they bought pre the Fed rate hikes. Why am I telling you all this if we don't really care what's going on there? Well, the stock did plunge down under $5 and I think even under $2 at one point. And so not surprising, maybe that's the type of stock that's being targeted by the traders here with these meme stocks. But let's start off by looking at a couple of these. Should you be buying any of these? Not if you're a long-term investor, I would stay out, but let's take a look at their charts, what's going on there, maybe why they're being targeted, because that's always a good exercise. And is this going to continue on? I guess that's a good question. So let's start with Krispy Kreme. DUNT is the ticker, as I mentioned. And for those of you who are only listening, I will describe what I'm looking at. So the price and consensus and surprise chart, that's what I'm looking at. And you can see maybe why it's being targeted. The shares were trading under $5 and even maybe under $3 at one point there at all-time lows here for Krispy Kreme. It only went public in 2021. So, and then to start 2025, it has been in a big decline there. And you can see some of the earnings are falling there as well. But let's take a quick look at the earnings on this one, because I was kind of assuming when I heard some of these were the meme stocks that maybe they were taking losses and they were not earnings positive. But I don't see anything going on the sales and EPS growth rates. There's nothing there. Does that mean it's flat? I'm not sure. We're going to check in a second. But 2026, 87% earnings growth for 2026. And they apparently do pay a dividend of 14 cents, but I'm not sure what they're actually making for this year. So they are expected to see a loss on earnings of 16 cents. They made 11 cents last year. And so this is, not a good scene when you go into the negative. And then next year for 2026, also expected to see a loss, but that's where you get the earnings growth, because a loss of just 2 cents for next year. The analysts are a little more bullish, or kind of mixed here for this year. One is higher, one is lower for this full year. Also the same for the quarter. They haven't reported yet. But we all know Krispy Kreme donuts. We've all eaten them. We've all maybe been to some of their stores, or, at least we have had them in wholesale type of locations where they've sold them as well. But so that's kind of where we stand with Krispy Kreme on the fundamentals. No PE since it's got that negative earnings. But these are the type of stocks that the memesters, as we call them, do target under $5, easy to manipulate. You can see right now, as I'm showing on the screen, on July 29th, the shares are actually down 8%. So still very volatile here. Let's take a look at what did happen on the chart. We need the more short-term chart. So I'm putting it into the interactive, and you can see, well, this is a little bit longer term, and you can see the bump up there. But let's see what happened even just in the last 5 days. Well, it had its glory there 5 days ago, and then everybody's been cashing in. But 1 month, you can see kind of where the memesters came in. It was a little over $3. It did soar as much as not quite $5, but this is where you make your money, right? And this is what the traders do. You can see the bigger trading volume down here at the bottom of the chart there. And now everybody is mostly getting out. This is what I meant by it seems like it's over. Let's stay on this chart and look at a couple of the others. So let's look at GoPro, because that one kind of came on at the end of the little surge here. And no, maybe it's still going. So look at this volatility, up, down. And let's look at the 5 days on this one. This looks very similar to what we just saw with Krispy Kreme. It was last week when it was going on. And there's the big surge as well, just like Krispy Kreme. So this one, GoPro was trading under $1. So this was a lot of fun, up to just over 220, 225. And now it's back down to 131. You got to stay on your toes if you're trading these, right? So that's GoPro. But now again, you can see why it might be one of these meme stocks. Let's look at Opendoor, because this kind of kicked it off for this go around. And this one, I already know was, it was definitely under $5. So let's look at the 5 day, and up, down. This one's not quite as clear cut as the other two. People have been coming in and out of this one, but it too is seeing a lot of profit taking now, and it's back down. But let's look at the 1 month. So it was trading under $1, as I said. And then this one soared up over 450 here, almost 481. And now it's trading at 207. So you got to be quick. You got to know what's going on, and you got to be literally trading these. And then we had Kohl's, KSS. This one, a lot of us shop at this one. So it's not under $5. It's trading at $11.80 right now. So that makes it a little more surprising. But remember, Bed Bath & Beyond, GameStop, some of those weren't quite as cheap as the dollar stocks, like some of these were. But let's look at the 5-day, and we see some of the memesters coming in a couple of days ago on this one. And it went from $12 almost up to $14. And now it's basically given back almost all of it. So the traders are in and out. But if you go back a little bit further, it was trading under $10 and then got the surge. Then it sold off, surge again. Now it's sold off again. So these are pretty volatile stocks. Like I said, let's take a look at Krispy or at Kohl's. We already looked at Krispy Kreme and just kind of see what's going on there because it is one that's not under $5. This one pays a dividend as well, like Krispy Kreme did, 50 cents or $3 or 3.9% yield. So that's interesting. 2026 is the earnings year we're in. Earnings expected to decline 75%, 8% for the next year. It's been very tough for Kohl's the last couple of years. And that's reflected also in this price of consensus chart. You can see it was trading at 5-year lows when some of the memesters came in. And look at the earnings down and to the right, just an earnings struggle the last couple of years. Let's take a look at those detailed earnings. It does have a PE because it does have positive earnings, 37 cents expected this year, but you can see they made $1.50 last year. So that's where we get the decline of 75%. And then still only 34 cents for next year. So not expecting much recovery. Estimates are kind of mixed for this year and the quarter. One is up in the last 60 days, two are down. But these are the type of stocks that become the ones that the traders seek out. So Kohl's KSS is another one. Unless you're trading these, I would not be in it. And also interesting, you can see it's down 8% today. Krispy Kreme that we just looked at was also down 8%. Let's look at the Opendoor. It's been trying to turn it around. It's down 12% just today. As I said, right around $2 a share. And scrolling down, earnings expected to be up this year, 48%, but down 36% for the next year. It has been turning it around a bit on the earnings. Look at the earnings here, a lot higher than where the stock is, but they are still in the negative. They still haven't been able to turn it around, even with getting rid of the inventory that they had to take the loss on. And they've been smarter as the market has stabilized with the mortgage rates the last couple of years. It's not a great housing market, but they haven't been taking, the big losses on the new homes that they've been buying. But still a loss of 19 cents for this year, loss of 26 for next year. So not really turning it around there, even though this is better for this year than the loss of 37 cents for last year. And as I always say, for people who are looking to be investors, I want to invest in companies that are making money. I don't want the struggle. I don't want, to wonder when they might turn it around. There's over 4,400 stocks on the Zacks rank that have the rank. So no need to go there unless you are trading it like these memesters are. Opendoor, this is GoPro. It's a number 2, which is a buy stock. And you can see this chart, even though it's trading near 5-year lows too, before the memesters got involved, this chart looks a little bit better, but really no earnings growth expected there. I've not seen this very often where all the price of consensus lines for 25, 26, and 27 now are basically on top of each other. They make one line. So what does that mean? That they do have some positive earnings because they do have a forward PE down here of 141. So they must be making something. And scrolling over here, a little bit down on the magnitude, I can see they're expected to make 1 cent. And then next year, 7 cents. Let's take a look at those detailed earnings estimates and see for sure if that's what's happening. Yes, it is what's happening. So you get 100% earnings growth for this year because they lost 242 last year and 1 cent earnings this year, and then 600% because when you're going from 1 to 7 cents, it's 600% growth. What's happening? The analysts, one is higher in the last 60 days for the full years. Nobody's cutting. When will they report earnings? Not until about mid-August. There's their earnings date over there, August the 11th. Are these shares down? Yes, down 7.8%. So we're seeing big declines even on this day when I'm recording this podcast. This is why, it is a trade, not an investment. But I'm going to keep an eye on all 4 of these and what other stocks they find that they might be wanting to be memesters in. But I actually see it as kind of a good sign that some of the memesters are back and that they're taking some risks out there and trading some of these stocks again, because, that shows a sign that there is interest out there in what's going on with a lot of the different stocks, not just the Mag 7s. And I like a little bit more trading action than what we have been seeing. So this isn't my game, buying the meme stocks. You all know, as I'm the value stock strategist here at Zacks, it would be like Warren Buffett buying the meme stocks. That's not going to happen. But I still like to see and watch what's happening with the traders on these types of stocks. I did watch GameStop, AMC, and Bed Bath & Beyond a couple of years ago. And I know my colleagues are all eyeing these with strong interest as well. So what else will join the group of memesters, if anything? Or is this trade kind of done already? We'll see, because last time the memesters had a little bit of life and it did last, several months. So we'll see here this time. May not be, but I'm going to keep an eye on it. So that's the story on the meme stocks. Should you be buying any of these right now? These are a trade again. So if trading is your thing and you have a pulse on these types of stocks, then these are ones to keep on your watch list for sure. So let me recap the stocks again. We had Krispy Kreme. That is DNUT. We had GoPro at GPRO. We had Kohl's. It's the retailer of choice this time around, KSS. And then we had Opendoor, little known real estate company that buys houses and then flips them. OPEN, Open is the ticker on that one. And as always, I aim to please here on the Market Edge podcast. I'm trying to cover everything of interest and, even meme stocks. So let me know any show ideas you may have. If you're on YouTube, leave some comments for me in the YouTube comments so I know what you're all thinking and wondering about, because I do aim to please here on the Market Edge podcast. And I'm going to be having some more guests on coming up soon, because there's a lot going on here, even in the summer when it usually gets slower, but it's not slow this year. In 2025, we've had 6 or 7 sessions in a row of record highs in the S&P 500 when I'm recording this. So this market is bullish and I'm going to be covering it all. So be sure to subscribe. Get us on Apple, Spotify, get us on YouTube. Go to Zacks.com/YouTube. Subscribe to get all of our podcasts and our videos on YouTube. There's a lot of stock analysis and stock picks there. You can get them all, but be sure to get us somewhere, and I'll see you again next week on the podcast.